Imagine a generation that grew up with smartphones, got a degree with debt attached, dreams of buying a home but struggles just to pay rent. That generation is Gen Z. And no, this is not just an American problem, this is a global problem. So the real question is, how is Gen Z ending up in so much debt? Let's take a closer look. I am Vishal Upadhyay and you're watching India TV. First, let's clear one thing. Gen Z is not lazy. In fact, they study more, learn more skills, and often work multiple jobs or side hustles. The real issue is this: income is growing slowly, but costs are growing fast. Around the world, rent has exploded, education has become expensive, and food, transport, and healthcare all cost more. But salaries didn't rise at the same speed. To survive this gap, people started borrowing money. That's where debt begins. Earlier generations followed a simple path: degree, job, savings. Gen Z's path looks very different. Degree, debt, job, years of paying that debt. Globally, the numbers are striking. About 43.5% of Gen Z adults have student loan debt, with an average balance of roughly $22,948 in 2024. Around 84% of credit-active Gen Z consumers already have at least one credit card, compared with 61% of millennials at the same age. Non-mortgage debt nearly doubled for Gen Z between 2021 and 2023, including credit cards, auto loans, and student loans. Surveys show 56% of Gen Z adults carry credit card debt, mostly to cover everyday expenses. And 84% of Gen Z student loan borrowers say debt has delayed major life goals like buying a home or starting a business. Next comes credit. Credit cards, buy now, pay later, and instant loans were once optional. Today, for many Gen Z adults, they are survival tools, not luxury items. Most debt is used for rent, groceries, transport, phone bills, and emergencies, not for shopping or vacations. And this is not just a US problem. Across Europe, Asia, and emerging economies, young people are taking on debt earlier and saving less. The type of debt may differ: student loans in some countries, credit cards or family loans in others, but the pressure is the same everywhere. Timing also played a big role. Gen Z entered adulthood during COVID, when jobs were unstable, hiring slowed down, and savings were low. Just as things began to recover, inflation hit. Prices went up, interest rates rose, and loans became more expensive. Expenses increased, but income growth stayed slow. Debt became the only option for many. There is also a key difference between Gen Z and older generations. Earlier generations often used debt to buy homes or build assets. Gen Z often uses debt just to pay rent and clear monthly bills. This kind of debt doesn't help people move ahead. It only helps them survive from one month to the next month. So here's the most important truth. Gen Z is not in debt because they are irresponsible. Gen Z is in debt because life has become more expensive than opportunity. So yes, Gen Z is not the problem, they are the warning signal. A signal that education needs reform, housing needs to be affordable, wages needs to catch up, and financial systems needs updating. If this doesn't happen, future generations will fall into the same cycle. What are your thoughts on this? Let us know in the comments. Till then, keep watching India TV for all the latest updates.